Yo, yo, yo. CPA Strength here, back again with his best accounting journal entry video ever. Now let's just get into this. We're gonna do a new thing. I'm gonna have this on the side here so you can see the question. So I'm not gonna write the question on the board. So you can see there's like 20, there's probably like 30 or 40 questions. We're gonna do a accounting video. We're gonna run off this. And I have the answers and everything here. So this might be something that you get in your class, and so you can run with it through me. If you have one of these from your class, like an accounting cycle practice problem, send it in. Email it to me or whatever, and I'll do it next. If it has the answers, I need the answers on it though, please. Please. Man, I want to really dip down low. Get low, get low. Okay. This is Accounting for Beginners number 124. Can you believe we're here? We have the whole playlist of before and after right here. No telling time is going to be here. It's the best accounting playlist on the internet. I guarantee that. Okay, please like, comment, share, subscribe. If you like, I'll give you a cookie. We're going to tell you April 1st, Adams and Family Inc. opened. DC Adler. This is what it's all about right here. If you're a beginner, you got to learn everything. So debit, credit, asset, draw, expense, liability, equity, revenue. The asset, draw, expense, if they are increasing in value, you will debit them. If asset, draw, expense are decreasing in value, you will credit them. Credit, liability, equity, revenue. If a credit is increasing, if a liability, equity, or revenue is increasing, you will credit them. If a liability, equity, or revenue is decreasing, you will debit them. Now, if you look on the sheet, over there, we'll show you the question on April 4th. So it's going to matter on the days around here. So April 4th, so 4-1, is that right? 1-4, yeah. Well, they just wrote April 1st, but we're going to do 4-1. And here, let's do a journal entry. So how do you do a journal entry? You would have DC Adler written out here big. DC Adler on a scratch sheet of paper. Here's what I would do. I would make, because you're gonna have, debits are gonna equal, here's how we're gonna do the journal entry. You're gonna do debits, then you're gonna have credits. Debits and credits have to equal. We're doing journal entries right here, so these have to equal, have to equal. So these are gonna equal. And this is actually gonna be a really fun one too, because we're gonna have more, it's one journal entry, but we're gonna have, let's see, we're gonna have one, two, three, four on one side. So we'll see 4 on one side, 1 on the other, but they just have to equal, so you'll see you can have more than other. So let's see, the following assets were received from John Adams. Now just like we're doing this exam, like I'm acting like I'm a newer student that knows DC Adler, and I'm looking at this, I'm doing this test. I got a test in class, and let's hope I do good. Let's hope you do good. Let's hope I do good. It says the following assets were received from John Adams. Now, as you can see, before the transaction, for the past several years, John Adams has operated a part-time business from his home. So John Adams, the following assets were received from John Adams. That is who decided to start the business. So that is the owner of the business. That is the owner of the Inc. Of our Inc. Adams and Family Inc. So it says the following assets were received. If you don't know anything, it gives you right there. So I would write, because you already you know your DC Adler. This is the only thing you know. Right? And you know that the balance sheet's on here, assets equal liability plus equity. You know that. You know revenue minus expense is balance sheet. You know that. But you don't know anything else. Now it's giving you accounts receivable is an asset. It says the assets were received from John Adams. Cash, $10,000. Accounts receivable, $1,500. Supplies, $1,250. And office equipment, $7,500. No liabilities received. So they're telling you, so you could write I would write all those next to assets. I would write next to assets right here, cash is an asset, accounts receivable is an asset, supplies is an asset, office equipment is an asset. I guess they're making They're gonna say supplies, since it was a 1,250, they're gonna make it an asset. It's a monetary value, because I kind of been teaching. Now, if supplies are, you're gonna have a monetary value for your business. All right, so for this example, they're doing supplies. So they're already telling you assets. They're already telling you assets. Now, you just started the business and the company received them from the owner. It's already telling you assets were received. Now, if assets are going up, we're gonna debit them. Cash, $10,000. $10,000 cash. Cash is an asset going up, so it's debited. What other assets do we get? Accounts receivable, $1,500. So we're gonna have more than one debit, you'll see. Oh, I hate abbreviating, but for space here, AR is accounts receivable. Supplies, $1,250. And office equipment, $7,500. Office equipment. And where do you get that? They got it from the owner, or it's contributed capital. It's equity. Synonyms are the same of equity is capital, owner's equity. I think a good way to think of that is thinking of the business. What's equity? The owner's equity. What's the equity? Like a mortgage, like a house mortgage. Like, do you have any equity in it? Now the answer here is contributed capital. You would have to be consistent to what your practice exams, your class is using. Are they saying owner's equity? Are they saying, is the book saying capital, contributed capital? But for this problem here, the answer is contributed capital. Look at all this. Look at all these assets you're giving the business. You're contributing. See, there's no transactions for it. Like, you didn't work. You didn't work to get these things. John Adams contributed them. Capital. Assets equal liabilities plus equity. You've got to know that as well. That's the basic accounting equation. Assets equal liabilities plus equity. It's on DC Adler. So also, if they just started, and it does say in the questions there was no liabilities received. So assets, that's what they say, that those assets and no received, no liabilities. So assets equal liabilities plus equity. Liability. Assets equal liability plus equity. If you've got all these assets here, what do these come up to anyways? 250. Here, the one over here, 7, 8, 9, 10, 2250. So you got 2250, 20,250 equals 0 plus, because they said no liabilities, plus equity. If you're just starting the business, then the equity's got to equal 2250 as well. And these have to equal. But you would know it would be an equity of 2250. So you're going to say equity, what's the book using? Equity, owner's equity. What's the book using? Equity, owner's equity, capital. Let's take this away because that's kind of confusing here. So you're going to have these 4 debits contributing to $20,250 assets, and the credit is going to be $20,250 contributed capital. I hope you enjoyed this, and until next time, CPA Strength, and I'm out. Deuces. After a loss like this, I heard depression could be permanent. Don't worry, this chopper will pick you up like some words of encouragement.